Hello traders, The title of the video is how to trade Dow Jones Index without a fear. All right, how to trade the Dow Jones Index without fear in 2017. All right, let's get started. I remember when I started trading first, I was trading stock indices, the FTSE 100, and most importantly, I was trading the Dow Jones Index. And anytime the market is open at 2:30 p.m. London time and 9:30 a.m. Eastern time, I have this feeling of fear because the Dow Jones can go very, very fast. And by the time you turn your head, you already lose some money, all right? So anytime I was placing my trade, I was afraid that I'm going to lose again, and because it's just going very fast, and you want to get it right. Another thing that I have discovered is that anytime you are trading the Dow Jones Index, you are competing with the best traders out there. So there is an element of fear anytime, day traders, swing traders are trading the Dow Jones, because if you get it wrong, you'll quickly know. If you get it right, you'll quickly know, because it can move up very fast, 100 pips, all right, very fast, and you need to get it right, all right. That's why I give the title, how to trade the Dow Jones Index without fear, all right. So in order to control the fear, all right, that comes with trading the Dow Jones Index, we want to trade around key levels. We want to use market patterns. So if you look carefully on my chart, I put on my chart the pitchfork tool. You can pay attention to the red pitchfork tool you see here. So 3 points we need to use the pitchfork tool. 1, 2, 3. A professional are using pitchfork tool. So if you are trading Dow Jones, in order to reduce the fear, use pitchfork tool, all right? Now, pay attention to the pitchfork tool, how the professional are trading on the edge of the pitchfork tool carefully, all right? You see this one, pull back nicely to retest it, bounce up to the edge. Look where we are now. We are now quite close to that, to the edge of that pitchfork tool. So what has happened? The price breaks below that red pitchfork tool. You can see so the pitchfork tool was supporting the price because the role of the pitchfork tool is to indicate the possible path of the price action. So as we have drawn it from here, once we have those 3 points, we know that the Dow Jones Index has a high chance, to stay within the boundary of this red pitchfork tool. Now, as you can see, it finally came out of the pitchfork tool, all right, and now it break below and it retested here. That was a bearish indication here. People sold it back down, but as they sold it down, the price failed to form a new lower low. So instead, we have a double bottom chart pattern on the monthly chart. Now, as I explained to traders before, a double bottom chart pattern on the monthly chart is a high probability trading setup, and you can quote me anywhere on that. All right. A double bottom chart pattern, a double top chart pattern on a monthly chart is a high probability trading setup. One must use a top-down trading method to trade it. So price failed to form a new lower low, and now what's happening is continuing to go up. Now it's trying, so to speak, to retest the edge of that red pitchfork tool. All right, so this is why you need to know. So draw pitchfork tool on your chart. See how I draw it on my monthly chart. This point, all right, this point and this point and the 3 point we need, and we have our pitchfork tool. I think I moved my pitchfork tool a bit. All right, I move it just a little bit just now. If you look carefully now the price inside my pitchfork tool. Also, I move it a bit. Hold on, please. Okay, that's fine. All right, so the price trying now to retest it. But as the price trying to retest the edge of the pitchfork tool, there is a key level that we must watch. Another thing I need to say to you, if you want to trade the Dow Jones without fear, first thing, use pitchfork tool, and also know, the key levels. There's one key level here at 20075. 20075. So we are now at a resistance level 20005, 20075, 20075. That's where we are now. So if we go, for instance, to the 2-hour time frame, you see that's the level here. You see 20075. So from the monthly chart, you see the reaction probably on the hour. We are now on the 2 hours time frame. Probably run fast into that zone. Acknowledges that zone 2075, 20075. That's why we have the consolidation here. You see the consolidation here. Acknowledging that resistance zone, he ran to the top and found a resistance. That's why people sold it last week, and they say Dow Jones coming back down now because there is a resistance there. All right, 20075. Pull back. Now it goes back again to the same zone. So if we want to be bullish, my friend, we need to be bullish above 20075. Breaks above, retest, turn around. As it is now, we cannot be bullish because we are at a resistance level. Priority to bullish signal above and priority to bearish signal below. In all cases, we must use a top-down trading method. So the first key level that we must remember if we are trading the Dow Jones Index without fear is 20075. I'm going back to my monthly chart because I don't want the video to be too long. Apart from the 20075, there's another key level here. The orange line here is 20769. 20769. Now, so if it breaks above the 20075, the price will attempt to go to 20769. That remains to be seen. But as I explained also to traders before, anytime you see two key levels, remember the median line between those two key levels. So as I'm telling you now, if it breaks above 20075 and find a support, breaks above, retest, implement a top-down trading method, if we start going up, the first target is the median line between those two key levels. So first key level 20075, next key level 20769. But remember always the median line is somewhere at 204. Call it 20449. 20449. There is another key level there, 20449. All right. So as a day trader, swing trader, position trader, you want to trade around key level. Another thing I need to mention to traders, if you look carefully on the monthly chart, the price is now in the fifth Elliott wave on the monthly chart. Okay, first wave, second wave, third wave, fourth wave, and the fifth wave. We are likely to see, okay, a triangle at the top of the market because the market sentiment is bullish, but the trend has been in place since 2009. We are likely to see a triangle, which is a warning. It does not mean that the market will definitely come down, but before the trend will continue, it must break above that triangle. So there is a high chance that we may see a triangle, okay, in this session here. All right. So what I did before for the S&P 500, I can do exactly the same thing again for the Dow Jones. Okay, see here. This is a temporary line that I'm drawing now, a temporary triangle that I'm drawing now. Bear with me. I'm under time pressure because okay, color it into green. Can you see? So this point, I draw a line through it like this to connect to the top where we are now, to that resistance. And so there is a high chance that we may see a triangle at the top of the market. All right. Apart from the 20075 and the 20769, there are two essential key levels. In fact, two influential key levels that we need to remember. The first one is the first long-term equilibrium price level in 2017. So if you forget, okay, everything else, do not forget, okay, the long-term equilibrium price level, the first long-term equilibrium price level for the Dow Jones Index is this one here, the orange line here, at 18987. 18987. You don't want to forget that key level. That's the first long-term equilibrium price level for a Dow Jones Index in 2017. We need to remember that level throughout 2017. You don't want to forget that. All right, 18987. Here it is. All right, that's the orange line here. Okay, right here. Now we see a deviation. So if the price start coming down, apart from the red pitchfork tool and also the blue channel that I've drawn here, you see I draw a blue channel on my chart. Okay, connecting this point and selecting one point at the top and drawing a line that is parallel to the first one. So this is about the market part of the blue channel. The price now in the blue channel is trying to go break above 20075 and retest that level and go to retest the top of the blue channel and also the edge of the red pitchfork tool. So remember, the blue channel is a trend line here and also the edge of the pitchfork tool. But apart from those key levels, we need to remember the first long-term equilibrium price level for the Dow Jones is 18987. So if the price start coming down, so we will pay attention to the trend lines, okay, media line of the blue channel, but we don't want to forget the 18987, which is quite one of the most influential key levels. All right. The current short-term equilibrium price level for the Dow Jones Index is at 19904. This is the pink line here. So 19904. See the pink line here? Okay, let's go to the daily chart. You can see. So that short-term equilibrium price level will remain in place up to the end of February 2017. Now, until we have a new short-term equilibrium price level. So right now, we don't want to forget the long-term equilibrium price level throughout 2017, 18987, and also the short-term equilibrium price level. We don't want to forget that level up to the end of February 2017. All right, still waiting for data here. What's going on? Well, I'm not seeing my data here. All right. Okay, now we're on the daily chart. You can see the pink line. This is the short-term equilibrium price level. The price is now acknowledging the short-term equilibrium price level by consolidating. Same thing we have seen for the S&P 500. Can you see that? So the price is, we can see that the price is oscillating around the short-term equilibrium price level. Okay, so what I'm going to do, all right, so we can say it's oscillating between the level of 19660, okay, call it 19660, and the level of 20075. So you can see the pink line is the short-term equilibrium price level. We draw, okay, two horizontal lines around the short-term equilibrium price level, and we have an horizontal channel. The top of the horizontal channel is in the zone of 20075, which is a very important key level. So the strategy is to look for an opportunity to sell below 20075 and priority to bullish signal above 20075. Breaks the bow, retest, implement a top-down trading method to trade it. All right. So for this where we are now is very good for day trading purposes, but for swing trading we need to wait until the price return inside, okay, the red channel, okay, the red pitchfork tool. All right, because the red pitchfork tool was supporting the price before. We are still below it. So for swing trading purposes, I will not swing trade at this junction. I'll wait until it goes back inside, which means break above the red, okay, trend line here, and retesting and find the support, and then from there we start swing trading. But right now, this is a strategy for day trading because we are below that, okay, unless you want to swing trading, short in this S&P 500, all right? So there is a consolidation on the daily chart around the short-term equilibrium price level. All right. Priority bullish signal above 20075, priority bearish signal below it. But if one is selling at 20075, okay, be ready to take profit near the median line, which is corresponding to the current short-term equilibrium price level. Okay, 19904. If it breaks below it, the final resistance, then we'll take it down to 19660. It's a consolidation. The current market pattern on a daily chart is a consolidation between 20075 and 19660. All right. Pay attention to the current short-term equilibrium price level at 19904. All right. Very, very important. One can only buy above the 2075 if the price, okay, finds support. All right. Very, very important. All right. So the takeaway here, talking about how to trade Dow Jones Index without fear, all right, we need to go into the mind of the professional trader and understand how do they trade. They use pitchfork tool. As you can see on this monthly chart, there is this red pitchfork tool. The price trying to retest the edge of that red pitchfork tool. Professional are aware of it. That's why last month you can see that the price came quite close to the edge and they quickly take their profit. Now it's finding a bit of support, but the challenge for the Dow Jones Index is to break above that critical 20075 and to find a support before we will give it a chance to head to the edge of that red pitchfork tool. Apart from the 20075, one should also remember 20769, another key level for a Dow Jones Industrial Average. All right. I also mentioned to traders here the first long-term equilibrium price level for a Dow Jones, a level, a very influential key level for a Dow Jones is at 18987. The current short-term equilibrium price level that will remain in place up to the end of February 2017 is 19904. In all cases, we want to trade around those key levels and also around those influential trend line, all right? But we are looking for what? We are looking for the price to break the bull, retest either a normal support or resistance level or trend line, okay, break a bull retest for bullish trading setup or break below retest and so on. We will also look for bullish candlestick pattern in the vicinity of those key levels. We also look for bullish or bearish chart pattern in the vicinity of those key levels. So bullish chart pattern, a bearish chart pattern will constitute a trading setup. Then we will implement a top-down trading method. All right, a bullish or bearish candlestick pattern in the vicinity of those key levels will also constitute, okay, a trading setup. Then we implement a multiple time frame trading method to trade it. But a very simple way that the price is moving in order to trade the S&P 500 without fear. We want to know where are the key levels, and we go into the mind of the professional trader so we do not step on their feet and lose money, because the S&P, the Dow Jones is going up very, very fast. And also, we are at the top of the market. Looking on the monthly chart, we are now in the fifth area wave. There is a high chance that the price will be confined in a triangle as a group of market participants are becoming very cautious, and another group of market participants are becoming very, very bullish because of the election in the United States. All right. This is the end of this tutorial about how to trade the Dow Jones Index without fear in 2017. Wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. Speak to you soon.